This entire red week dropped price with mostly below average volume, meaning even consistent daily selling volume around 11 million can gradually advance below the 30 boundary to form these kinds of drops between the 1 to 1.618 arcs down towards the 2755 to 2550 range. And even if price can get back to closing over 32 over the next 3 to 4 days, resistance would potentially be stronger at that intersection with the second Fibonacci time zone line and the larger spiral in red. Also, it would be necessary to close over 37 by the end of March to get past those bearish influences at previous highs and keep the larger uptrend intact. Boeing stock price under a much greater bearish advantage with the descending triangle formation discussed in previous videos. In addition to the kind of 3 methods falling price action from March 1st to March 8th, which also had higher volume on the first and last days, to improve conditions for an acceleration down towards 189, after which 200 would reverse roles to become a strong resistance area. Now, even if there's no follow through to go below Friday's red close, the stronger bearish advantage remains in the long term until price can close over the descending trend line and the week 20760 level towards the end of the month around the time of the last 2 time zone lines. And then please stay tuned and subscribe because there will be coverage of more charts and a new series on the Keltner channel indicator releasing next week. Now on to PayPal, which as expected had better conditions to drop near the convergence of the center fan line, the spiral, and the 61 level. And since the 58 area aligns with the area where price opened the gap down, there could be more potential for the drop to continue the pause over the next 3 to 6 days to produce another attempt at clearing over 61. On the other hand, if there is even just one close under 58 within the next week, and daily selling volume is over 17.5 million, a return towards 56 approximating the spiral and the center fan line becomes more likely, in a way similar to the position of Intel stock price, which has also seen several failed attempts to fill in its gap down. In this case, it would be one close under 43.60, with even just daily volume over 50 million, that could take price down into the established range where support potential is weaker than before. And even in a scenario where price would be able to jump back up towards 47, there's still more potential for resistance there due to it being the lower boundary of the previous double top pattern and an intersection with the spiral.